Hi, everyone, and welcome. We'll get started in just a moment. We want to give folks a bit of time to enter the Zoom meeting. While we wait, it's great to see so many of you joining us this evening. We truly appreciate you taking time out of your Thursday to be with us. These quarterly town halls are always a special opportunity to connect with you, share updates, and let you know how we're working to grow your ministry through values-aligned investing, creating a more just and sustainable world for all. Before we begin, a quick reminder, the information shared today is for general information purposes only. It does not constitute legal, tax, investment, or financial advice. All right, let's get started. Hello again, my name is Noah Tabor. I serve as the General Counsel here at UCF. Normally, our President and CEO, Charles Buck, would be the one to welcome you today, but he's away. So you're stuck with me for the kickoff. Okay, if this is your first time joining a UCF Town Hall, a very warm welcome to you. United Church Funds is a trusted investment partner to more than 1,200 local churches, religious judicatories, and faith-based nonprofits. We currently manage over $1.2 billion in assets. As a nonprofit ourselves, we bring deep experience supporting fiduciaries in the development, management, and governance of endowments. And we're proud to be recognized as a leader in the responsible investing space, aligned with the values of the UCC and other progressive Christian communities. We always like to get a sense of who's in the virtual room, so we help shape future town halls to better meet your needs. You'll see a poll question pop up on your screen now. It's a simple one today. How would you describe your level of investing, knowledge, or experience? Go ahead and choose an answer that best fits you. We'll give you about 30 seconds. Your options today are A, I'm a total newbie. B, I know the basics, but that's it. C, I have a firm grasp of investing principles. D, I've worked as a financial professional. Or E, I'm the next Warren Buffett. All right, let's take a look at those results. Okay. No Warren Buffetts, that's okay. Kind of across the board. Well, it's great to have you all with us today. Moving on, let's take a quick look at our agenda for today. But first, a big thank you to our behind-the-scenes team of Debbie Weebewow and Adam Sank from Marketing and Communications. You don't see them or hear them during the town hall, but they're the ones who make it all come together. We're grateful for their time and expertise. Now on to the agenda. You've heard the welcome introduction. We can check that off the list. Next, Kelsey Rose, our executive for institutional relationships, will share some key organizational updates from the past quarter. Then Matthew Ilian, our director of responsible investing, will walk us through UCF's most recent work in the responsible investing space and how it supports your mission. After that, Stacy Pettis and Matt Wagner from our institutional relationships team will join up with Lan Cai and Manoti Dhanaraj from our investments team to talk about current market trends and the outlook ahead. And finally, we'll leave time for your questions and answers. Feel free to drop your questions in the Q&A box at any time during the meeting, and we'll get as many as possible in at the end. And with that, I'll turn it over to Kelsey Rose for organizational updates.
Thank you, Noah, and welcome everyone. I'm excited to share a few important organizational updates from UCF. First, UCF is thrilled to announce Lan Cai as the new Chief Investment Strategist for United Church Funds. As many of you may know, Dave Clausen, the former Chief Investment Strategist, has become the new President of the Pension Boards of the UCC. And we are celebrating this new promotion for him. And at the same time, we are grateful for the wealth of experience and knowledge that Lan Cai continues to offer to the UCF investment team. As you can see on the screen here as well, Manoti Dhanaraj is now the Senior Investment Strategist. She has been a valued member of the UCF investment team for many years now as well. And we also welcome Vanessa Wong, a new member of the investment team as investment strategist. You can read all of their bios in the link provided, and later in the town hall, we will hear from Lan and Manoti, where they will speak more about market trends and our investment outlook. Next up here is that episode 8 of the Just Investing podcast is live. This episode features special guest Marita Canedo from Migrant Justice, a nonprofit working for migrant worker rights in the dairy industries in Vermont. I encourage you to take a listen. This episode and all episodes of the Just Investing podcast are engaging explorations into the world of responsible investing. And also, we have published the Q1 2025 Fund Fact Sheets on the UCF website. The Fund Fact Sheets provide key insights into each of UCF's fund offerings. for the quarter. And you can find the most recent quarter fun fact sheets in the link provided, and we will be sure to include a link to them in our follow-up emails for all town hall participants as well. And lastly, we are looking forward to seeing all of you who will be attending the UCC General Synod in Kansas City this summer. UCF will have a booth in the exhibit area, and we will be leading 2 workshops for you to check out. We truly hope we can connect with you there in person. And that is a wrap on organizational updates. Thank you all for being part of the UCF community. And now I invite Matthew Illian, Director of Responsible Investing, to join us and to share about UCF's responsible investing work.
Thank you, Kelsey. Greetings to all of you. Good evening, good afternoon. If we have anyone from Hawaii, good morning. So we wanted to begin this section just talking about the shareholder resolutions that were filed this season by our colleagues at the ICCR. And those of you who attend these webinars will know that ICCR stands for the Interfaith Center on Corporate Responsibility, an organization launched 52 years ago, and the UCC was one of the founding members, and we continue to be deeply engaged in this work. This year, we had 217 resolutions filed. Now, that is a significant drop from the year prior. There were about 400 resolutions filed. And that drop we attribute to changes, politically, particularly in the SEC, that made it easier for corporations to dismiss shareholder resolutions that are filed. But thankfully, that didn't impact the work that we were doing in a significant way. But we have seen an impact across the board, and we continue to see attacks on the ability to file shareholder resolutions and also the voting of proxies. So at UCF, on the next slide, we were involved in 7 different shareholder resolutions that are listed here, and you can see 5 of them are listed in gray. The 5 in gray represents shareholder resolutions that were withdrawn for agreement. And this occurs when we can come to terms with the company before it has to go to a vote at the annual shareholder meeting. So you'll see the 4 on the right, for example, all have to do with enhanced lobbying disclosure. And this is an area that we're active in because since the 2010 Citizens United case, and even before that, it's well known that corporations have been spending billions of dollars each year to sway policy and influence elections. And so although some of this is disclosed, a lot of it has not been disclosed. And so we've been helping ask these corporations, and in some cases demanding that they bring greater transparency to their corporate disclosures. So I'm not going to go into the agreements here. We actually have a blog post that goes into this a bit more, but in each case, each of these companies agreed to enhancing their lobbying disclosure. And I think we had a total of $12 million of additional lobbying that were disclosed through this. At Dollar General, you can see that we're seeking a human rights policy, and that's a shareholder resolution that will be going to vote end of this month. At Citibank and JP Morgan, those are both focused on indigenous rights. At Citibank, that did go to a vote. It was shareholders supported it to the tune of 13.5%, so that was less than we wanted. But at JP Morgan, I want to highlight that actually on the next slide. And I'm highlighting this agreement, so this never went to a vote. JP Morgan agreed to enhance their disclosures and update their practices on recognizing indigenous rights. And it's one thing for me to say this is a win, but I want to highlight this because our indigenous partners, we work with a group called Tallgrass Institute, recognize this as the first American bank to recognize and say we're going to use heightened due diligence on all of our underwriting and all the lending that we do. And they've really kind of pointed to this agreement that JP Morgan did as a kind of a best-in-class practice that they want to see all the American banks. And so we were glad to be a partner in that work. Now, one of the things the indigenous partners are calling for, and the way they use this terminology, is they are calling for free prior informed consent, or FPIC. And this is a practice that ensures that they, have a voice before the lending is done, before the project is engaged. And in fact, there's a case going to the Supreme Court later this summer that will determine whether the Apache's sacred ground in Oak Flat, Arizona, can be turned into a copper mine. So that'll have to be a topic for a future town hall, but this is something that's live, certainly for many indigenous communities. The last topic we want to talk to you about is often ignored or maybe downplayed a bit in the world of investing because it's a topic of bonds. And although bonds don't get as much attention as equities, well, I think many of us would argue they're just as important, if not sometimes more important than even the stocks or the equity counterparts. This slide and the slide that follows is focused on UCF's investments in green and blue bonds. And thanks to you, our investors, those who invest in our balanced or fixed income funds, we were able to deploy through our fixed income managers $100 million in green and blue bonds by the end of 2024. Now, what are green bonds? Well, let me give you an example. We were able to invest around $200,000 in the Connecticut Green Bank. This is a state-based bank. It enabled 4,800 residences, families, to get preferred lending on putting up rooftop solar systems. This enabled 39 megawatts of renewable energy credits, and it targeted 50% of the funding went to vulnerable communities or lower income communities. At Ford, this money went to supporting their EV and battery storage development. At the European Investment Bank, that was $2.5 million in total investments there. The European Investment Bank was the first green bond issuer back in 2007. They continue to be a leader in renewables and the green transition. And then at the World Bank, there is one of the investments we were able to make there supported. It was a loan for groups working in Vietnam to provide drinking water to children in schools across Vietnam. And then on the next slide, it lists this blue bonds. One of the bonds that we were particularly excited about is this Galapagos Life Fund. And that we invested $250,000, and it supports sustainable fishing practices and ensures that this area is not going to be overly commercialized. And so we wanted to let you know the bonds can sometimes have the deepest impact in our entire portfolio and can be quite exciting. So with that, we're going to turn to another poll question. And I'm also going to turn the presentation over to my colleague, Matt Wagner, Executive Vice President of Institutional Relationships, to talk about the support and resources that you need. Matt, I'll turn it over to you.
Matthew, thank you so much, and thank you for sharing our deep commitment to sustainable and responsible investing on behalf of our clients. And, often when we talk about the activities that we do with shareholder resolutions and all of the engagements that we do, we talk about them being wins. They're really wins for folks for not just our clients, but all folks that care about justice, that care about our climate, and making the world a better place. So thank you to our clients for trusting us with your assets. so that we can help lead this work on your behalf. We're really grateful for the opportunity to do that. You have a poll question in front of you, and it's really related to the support and resources that UCF wants to continue to provide to our clients. And the question is this: in which areas would additional support or resources be most beneficial to your church or organization? Now, there's 5 different responses, and I would invite you, I think, to check any of those that might apply. Information on responsible and values aligned investing, like you just heard from Matthew. Of course, that's sort of mission critical to UCF and probably to your church and organization. So if we can provide you more on that, we're happy to do so. Perhaps you'd like additional support in understanding fund performance reports and the fund fact sheets that, as Kelsey mentioned, are just now available on our website for Q1 2025. Perhaps you'd like to hear more of the information that we provide on these town halls about market trends and outlooks. Or perhaps if you're on the sort of more transactional operational end of your church's finances, perhaps some expanded transaction options, perhaps the opportunity to upload files directly. Lots of different things that we can do there and that we're working on currently. And lastly, fiduciary responsibilities for financial leaders. As you welcome new investment stewards onto investment committees, it's important to be able to educate those folks on their legal responsibilities to act as good citizens related to your assets. And so as we look at the poll results, you can see there that for this particular audience, market trends and outlooks is one area that you'd like to hear more from UCF, and we'll definitely take that to heart. Over half said understanding fund performance reporting and or fund fact sheets. We'll be happy to do that as well. On down, looks like more information on responsible and values aligned investing, fiduciary responsibility. So every piece there got a fair number of votes, and I want to thank you for sharing sharing your thoughts with us on how we can continue to provide you with top tier service, not only from our institutional relationships team, but from our director of responsible investing, our client services team, and our operation as a whole. So thanks for sharing with us. We're going to switch gears and talk a little bit about some market trends, which was the top answer of the poll question. So we're going to dig right into some investment performance and how we're positioning portfolios in what clearly has been a volatile few months, not only for U.S. markets but also for markets overseas. And so let's dig right in. If we go to the next slide. We want to talk about some of our takeaways from Q1 and thinking about how we're positioning portfolios into Q2. And I think what I would like to share with the folks on this call is very similar to what we're sharing with as we do portfolio reviews for our clients all over the country. And that is this sort of shorter term volatility and understanding the causes behind that, and maybe understanding that it might not be as long lived as what sort of feels like it might be right now. And then sort of these longer term sort of trend setting or trend reversing things that are happening in markets. We want to be able to understand those as well. And as long-term investors at United Church Funds, we have to understand both sides of that equation. What's happening in the short term, being able to tactically shift portfolio allocations, but then longer term, how do we take advantage of where we think markets might be headed from here? So just a couple of bullet points for you to sort of set the table for some slides that are coming with some additional charts and graphs to help unpack some of these bullets. Over the last couple of years, if Stacy or Kelsey or I have done a portfolio review in your church, you might have heard us talk about, as we came out of the down market in 2022 and into 2023 and 2024, both which were very positive. We talked to our clients about the fact that that was a fairly narrow recovery. The concept of these magnificent seven huge global players in the tech space, the Microsofts, Apples, Googles, Nvidias, Teslas, on and on of the world. There were 7 to 10 of those companies that grew to the point where they equated to about a third of the market weight of the entire S&P 500 index. And those companies drove stocks over the last couple of years. And now we've started to see a reversal to that. We're going to talk a little bit more about that as we go through the slides. In Q1 and into Q2, because of that little bit of sort of a reversal with the Mag 7 stocks, investors started to look more closely at value stocks. companies that instead of making microchips and focusing on AI are still pumping out toilet paper and cornflakes and the things that the more defensive sectors related to the idea of value strategies within equities. And UCF has the ability to do that within our balanced portfolios as well. Another topic that we're going to cover, it relates to international equities. So as many of you know, international equity has been a part of our balanced approach to global equity in the UCF Balanced Fund and in the Beyond Fossil Fuels Balanced Fund and in the Alternatives Balanced Fund. And for a long period of time, international equities have trailed U.S. equities. In the first quarter of 2025, that reversed. So we want to talk a little bit about that with you all tonight on this call. And then lastly, flipping to fixed income, and you heard Matthew talk a little bit about some of our green bond exposure, which is really exciting. We've seen high quality fixed income fixed income overall, and our fixed income fund was positive in Q1, and we've seen rates come up a little bit. So we want to be able to talk with you about that. And then lastly, of course, as we moved into April and we saw the Trump administration outline their plan for tariffs and for reciprocal tariffs and for all of the potential trade deals that may or may not be out there, we saw a huge surge in market volatility, both to the downside and to the upside. Markets have sort of found their footing over the course of the last couple of weeks, but we want to definitely talk about the impact that these tariff policies have had just over the last month and a half, and then as we move forward through the summer and the remainder of 2025, and how we can position portfolios from there. And of course, overarching all of these things, whether long-term or short-term, United Church Funds continues to be able to offer this dynamic, flexible strategy of balanced funds and customized portfolios where we can meet regularly with our clients to understand your objectives and make sure that your investments match both your operational needs and as well as your missional aspirations for your church or organization. Let's go on to the next slide and dig in a little bit to some of the numbers from Q1. And you can see there the chart on the left has several columns there for just last year, 2024's performance of various indexes, 3-year, 5-year, and 10-year. And if you've been and of course, then on the far left, you see Q1 2025. And of course, if you've been on these if you've been on these town halls or in a portfolio review with us over the last couple of years, a lot of green numbers on the equity side of the ledger. But in Q1 of 2025, the S&P 500 came back a little bit, gave up about 4.5%. That's not, totally uncommon. We had a change in Washington. We had some market uncertainty related to that. Markets, of course, you hear many folks on CNBC and other places say markets like certainty. We had a little bit of uncertainty as we started 2025, and so it would be natural that after 2 years of outsized gains in 2023 and 2024, markets might give a little back as we enter a new season and potentially a new market cycle. However, if you go down on that far left column, that Q1 column of the chart on the left, you can get into those Barclays bond indexes, and you'll see that bonds were positive for Q1, with the Barclays Global Aggregate, which is a pretty broad bond index, returning about 2.6%. Long treasuries did a little bit better. Bonds with shorter durations still positive. And then you can see down below there, other sort of different bond asset classes, high yield, et cetera, generally speaking, positive for the first quarter. Is this a trend reversal? Are we going to see continued market volatility? Can we continue to lean into some of our bond exposure and balance strategies? Those are some of the things that we're going to unpack over the next few minutes of the town hall. If we go to the next slide, thank you. I'm going to bring in Stacy Pettis, our Executive of Institutional Relationships, to walk us through the next couple of slides, and then we'll bring in Manothi and Lan to answer a couple of questions. Stacy?
Thank you, Matt, and welcome again, everyone. I just wanted to give a little bit of historical context before bringing in our investments team. So as we're looking at this slide, we can see that after a negative year for equities in 2022, UCF's clients have heard us speak several times about a narrow market recovery, driving markets up in 2023 and 2024. We've said it over and over about the Magnificent Seven, which are the names that are listed over to the right of the screen. they have grown to approximately 30% of the market weight of the S&P 500. And therefore, as those companies go, meaning up and down, our broader index also goes the same direction as those companies typically. Long-term return prospects still favor earnings power of these companies despite their recent pullbacks. As we go to the next slide, we see a couple of charts that speak to investors favoring a more diversified approach to holding value stocks or value companies and growth stocks in an equity portfolio. So my first question that I want to pose to Manothi Dhanaraj from our investments team is, how does UCF's ability to use our investment managers to tactically allocate between both value and growth strategies, and how might this benefit our clients in today's market climate?
Thank you, Stacy. That's a really good question, and I think both you and Matt spoke to how this past quarter we really saw a reversal of the last 2 years in the importance of diversification, right? And so we've been diversified across geographies, fundamental and quantitative strategies, value and growth, as well as active and passive strategies. And here, what we're really trying to show is that on the left-hand side, value did well this past quarter. And part of that was due to this rotation out of growth stocks, that Magnificent Seven on high valuations, as well as some news on some AI competition coming out of China. Additionally, those initial tariff talks, which kind of picked up into the second quarter here, created some of the uncertainty, which led to a lot of investors shifting their assets toward more value defensive, safe stocks. The right bottom chart there, you'll also see another benefit of diversification. So even within value and growth stocks, in each of those years, you can see that they had of the top 50 companies' performance, there were both value and growth stocks incorporated within those time periods. So to your question, Stacy, the benefits of our portfolio is, given our diversification, we are able to tactically maneuver within asset classes between both growth and value stocks, as well as other areas within the market.
Thank you. I'm gonna turn it over to Matt to ask the next question of our team.
Great. Thanks, Stacy, and thanks, Manothi. And yeah, we retain this sort of flexible, particularly in our balanced funds, we retain this sort of flexible allocation model. And let me remind, this is a good time to remind our clients on the call that our balanced funds, both the Beyond Fossil Fuels Balanced Fund and the UCF Balanced Fund, both have target allocations of 60% global equity. That means equity that's based both here in the US and as well as overseas, which we can maneuver around in overweight and underweight, and 40% to fixed income. We have the ability to go plus or minus 10% from that 60-40 target. And so again, a lot of flexibility in our structure to be able to sidestep risk or take advantage of opportunities as the market dictates. I also want to mention to the folks on the call that there is a Q&A box down at the bottom, and if you have a question that you'd like to pose at the end of the call, please do so using that function. And I'm going to go ahead and, before we go to the next couple of slides, I'm going to go ahead and answer one question, and that is from Carl Lehman. Carl is a regular visitor to our town halls. Welcome, Carl. Good to see you, or good to have you again. And Carl has a question about the balance, or the as of, say, the end of the first quarter, or as of now, the balanced fund, what was the breakdown between stocks, bonds, and cash? In the UCF Balanced Fund, we took down some of it. We were slightly overweight equity coming into February and March. Our investment team made the tactical decision to take down a little bit of that equity, move that to fixed income and a little bit of cash. And so as we ended the first quarter, and as we actually came into certainly some of that more volatile time that we saw, like sort of in later in March, early in April, we were essentially neutral in the balanced fund, 60% equity, about 38% fixed income, holding about a 2% cash position. So if we want to bring the slides back up, we can return to that question as we go through the rest, but I just want to remind everyone that the Q&A box is there, and yeah, let's go ahead and move back to slide 18 if we can. Great, thanks. So we're going to talk a little bit. I'm going to bring Lan Cai in. Lan, it's great to have you. We've seen you on these calls before, of course. Let me congratulate you on being named to be our chief investment strategist. As I've told a number of our clients, we have a tremendous amount of confidence, rightfully so, in you and Manothi and Vanessa as your new colleague, and can't wait to do more of these town halls with you. Let's talk a little bit about sort of the international versus U.S. exposure that we have at United Church Funds. As our clients know, we've had a global approach to particularly our balanced funds. And while international equities have underperformed U.S. equities in past years, we have still found it to be important, both from a valuation perspective and just a geographic diversity perspective, to continue to own a little bit overseas. And in 2025, we saw a little bit of a reversal of that. International equities outperformed thanks to a weaker dollar and some of the uncertainty in the U.S. So as we go to the next slide, thank you. I do want to talk a little bit too about tariff uncertainty. So as we think about being global investors with a variety of these tariffs sort of in play and where these trade deals might come from, this kind of sort of dovetails together. The idea that being a globally diversified investor is not just about where the best valuation is, but what the potential prospects for some of these markets might look like moving forward. Is it going to be a more fair playing field? Is it going to be less fair? So, Lon, my question to you, if you would, can you give our audience a little sort of glance or look in about how we've positioned our portfolios between U.S. and international holdings, given everything that's going on in markets today? Lon?
Yeah, thank you, Matt. And hi, everyone. So maybe we can go the slides before this one. Coming into 2025, the total equity fund at UCF is slightly overweight in the international side. And then that actually benefit from the big reversal from the international versus US, as you mentioned, Matt. When the valuation discount it was at extreme, and that was the case end of 2024, we usually see a big reversal. And this time the reversal is caused by the US dollar weakening in the first quarter. But also there is some strengthening sign in the European companies' earnings. So now all the first quarter earnings wrapped up, exclude the energy sector, which we probably don't care that much at the UCF. The earnings in Europe, actually 60% of the company beat. And then in the US, the first quarter earnings also strong. But looking forward, we are still slightly overweight the international because the monetary policy is in an easing cycle in Europe, and the fiscal policy is kind of stimulus. And then the current administration doesn't seem to have a strong preference for a strong dollar. Mm-hmm. The earning perspectives a bit uncertain on both sides, because your next slide showed a lot of the tariffs, and then yes, we're on a 90-day pause, and then there's a 10% versus 30%. But in any case, it still has quite a bit of uncertainty for the corporate earnings going forward. So when we compare U.S. versus international, we still slightly prefer international at the moment, and that is how positioned in the total equity fund. I also wanted to mention the bond fund.
Please.
Matthew talked about that the people usually don't look at fixed income, but in fixed income with the current rate level and then also the spreads, it probably be a viable investment instruments. And within the bond fund, UCF has about 5.6% exposure to EM debt, and that has done quite well this year because the emerging market corporate bond spreads were not nearly as tight as the US. And then also the currency, and then particularly for certain countries are making big improvements in their monetary and fiscal policy, are doing quite well. So we are still having that exposure in the bond fund too.
Excellent. Lon, thank you so much. And there's a lot to unpack for your team right now as we're seeing some questions come into the Q&A, and it is certainly a little bit of a time of uncertainty. As you said, 90-day pauses on tariffs are great, but we're not 90-day investors, right? We're long-term investors, and so we've got to take all of that into consideration. Thank you for that response. And I'm going to toss it back over to Stacy for our final slide and question, and then we're going to open it up to the group for Q&A. So Stacy, take it away.
Great, thanks. As we look forward at these two charts on slide 20, if we could flip over to that. So as we look at these two charts, it tells a story of how markets have rebounded after periods of pullbacks. So on the left, we find that the 12 months after a 20% pullback, markets were positive 7 out of 10 times, with a median return of 20%. If investors stay invested over a 24-month period after a pullback, the median return was 38% and positive nearly 80% of the time. So Lon, this question's for you. Our investment team, we know, has decades of cumulative experience in both up and down markets. Can you share a couple of your tips that you have for clients about the importance of staying the course during times of market volatility like this?
Thank you, Stacy. That's a good question. I will share a couple of tips, and just a couple. One is stay invested. And I think this chart shows you why stay invested is so important. From time to time, there are market drawdowns, and these two slides all shows after 20% market pullback, what equity market would generally look like 12 months after and 24 months after. There are only very few exceptions. Most of the time, 12 months after and 24 months after, equity market enjoy a big rally recovery. This time, and I know that we're a long-term investor, but I really wanted to share that from the relative higher in February 19, talking about US market, to April 8, that was the trial, there was about 19-20% drop. Subsequently, we already had a 19% rally. So we achieved 20% back within a month. So I think that also kind of verified that we need to stay invested. The second tip is stay diversified. Between Menotian and I, we talk about the beauty of diversification between international and then domestic, also large cap, small cap, value growth, and fixed income, and then equity. So stay invest and stay diversified.
Got it. Thank you so much for that. I think at this time we'll kick it over to the Q&A. We know that there are some questions that have come into the inbox. Some of them have been answered in the conversation, but there's a few more that that we want to make sure that we cover. Matt, did you want to?
Yeah, I'm happy to jump in. Thanks, Stacy, and again, thanks, Lon, for the response to that question and giving our clients just sort of the short term, kind of time capsule of what's happened since the relative highs that we hit back in February through kind of the trough in early April, and then here as we sit back in the middle of May. Our funds have performed pretty well through that, and we've already seen sort of that similar cycle to what that previous slide showed. Adam, if you can pull the Q&A slide back up, I would appreciate that. And I want to go through some of the Q&As that we have here in the time that we have available. left to us. I'm going to pull in my colleague Matthew Illian. Stephen Combs had a question about the cost to UCF of shareholder initiatives. So, who bears those costs, Matthew? Can you talk a little bit about our structure and how we achieve these the shareholder engagements and some of the results that we do as it relates to that question?
Yeah, no, absolutely, Matt. So I think what this gets at the heart of UCF's difference, or what makes us unique in the marketplace, is that the responsible investing work that we do, the shareholder engagement work we do, is really integrated into the way that we invest. And so we don't break it out and really separate it in that way. Maybe to kind of put a finer point on that, when we meet with our managers to kind of review their performance, these are external managers. We're often asking them, and I'm in many of those meetings, also about their own responsible investing activities to ensure there's accountability there. So that's something that we really do pride ourselves in, and we think is critical to maintaining the faith voice that we have. That I think particularly in the moment that we're living through right now, does set us apart in a really unique way. And Stephen, I also saw that you were asking about a meeting, and I just want you to know, and Stacy knows this also, but I'd be happy to participate in that and share some more specifics or any other follow-up questions that you have.
Matthew, thanks. Appreciate it and appreciate that. And as it relates to cost at UCF, I would note to the folks on this call that as we've grown as an organization, we've been able to do two things. We've been able to increase and invest in our technology and our customer and our client services as we've gone from 6, 7, 800 million to 1.2 billion dollars in assets. At the same time, we've been able to pull costs down for everybody. And if you're invested in one of our balanced funds, if you have a customized strategy, more than likely, and there's some outliers on both sides, but more than likely, you're paying somewhere in the neighborhood of 75 to 85 basis points, or 0.75 to 0.85% as a percentage of the assets that you have invested with us on an annualized basis. And that is a very reasonable fee for an actively managed platform of funds that is also doing all this good work behind the scenes. And if anybody has questions about fees, I would encourage you to reach out to Stacy or I at our email addresses, which are on the website, to further break that down for what that might mean for your specific portfolio. I'm going to answer one question here, and then I'm going to bring in either Lan or Manothi. I'll let them fight over it to talk a little bit about small caps and kind of where we see our small cap exposure as we go forward. Ann McCorkindale had a question about that. But before we get to the small cap question, Mike Miller had a question about anyone seeing new highs likely for the S&P 500. Of course, there's some talking heads on CNBC and other places saying maybe, maybe not. What I would tell you, Mike, is that we have positioned our portfolio in a way that is very prudent for long-term investors. We've been able to weather this sort of period of market volatility, and that's not to say that that won't continue. So not to give you a non-answer here, but I think anybody who would go out on a limb and say as a certainty yes or no on whether we might see new highs for the S&P 500, we certainly see what appears to be in many ways a fairly strong U.S. economy. But we have a lot of uncertainty still out there as these, again, sort of a 90-day pause on tariffs. That doesn't mean a whole lot for long-term investors. And so we're watching all of the topics that we've talked about today. Our investment team's watching that very closely. We're continuing to communicate with our clients to make sure that we're keeping you up to speed on how we've positioned portfolios, again, to sort of mitigate risk and take advantage of opportunities. Lan or Manothi, I see Lan coming on camera, so I'll point this to you. And in the couple of minutes that we have left, Lan, I would like for you maybe just to talk very briefly about small caps. So we have a number of managers there in our small cap exposure. Just at a high level about sort of, what happened with their performance versus benchmark for the quarter, and kind of where we see small caps as part of a portfolio moving forward.
Sure. Thank you, Matt. I will give it a try. So there are three managers in the small cap for UCF. One is kind of the small cap core, and then one is small cap value, which is Channing, and then the other is small cap growth, which is Westfield. So in the first quarter, small cap value manager Channing had a particularly tough quarter. Their names, as you might expect it, because there are a lot of uncertainty on tariffs or the impact of tariffs, and the market tend to front run. So some of the names that they have got disproportionately affected by the front run impact of the tariff concerns. And then the companies, after they report, after they provide a guidance, actually recovered quite a bit. So yes, they had a first quarter kind of tough environment and tough performance, but they recovered most of the underperformance quarter to date already in the second quarter. In
Excellent.
terms of
Yeah.
the
Please
small
go ahead.
cap allocation, I think the observations are correct. And then, as you mentioned at the beginning of the market trend, last year there's a clear narrow leadership, and those are the Magnificent Seven large company leads the U.S. And then over the last 5 years, large cap has outperformed small cap. At this moment, small cap and people's expectation for small caps are pretty low because they're going to be affected by tariff. They're also going to be affected by the financing environment. Interest rates are relatively high, and many of the small cap financings are floating rate, so they have to adjust when it is higher instead of people locking 30-year mortgage at the low. So those are the two big factors. Things might change. And then we will stay invested in small cap. The weight will be different over different time periods, but we will still stay in small cap.
Excellent. Lon, thank you for that response. Thanks for the questions as well on small caps. They make up a fairly small allocation of our overall balance strategies. If as you look at your overall holdings, typically less than 10% or, somewhere between that sort of 5 to 8% generally. But it's important that we really strategize over all portions of the portfolio, and really glad to have that question. Well, as we wrap up today, I want to thank all of the folks that spent time with us this afternoon, or this evening, or potentially this morning for our friends in Hawaii. And I want to really thank you all for being our clients and allowing us to be your trusted partner in responsible investing. I want to thank my colleagues, Noah, Kelsey, Matthew, Stacy, and from our investment team, Lon and Manothi, for joining us tonight. Wishing all of you a great evening, and thank you again so much for joining us. Take care.